What is cash basis accounting? When is it appropriate? What are some of the key considerations? Let's take a brief look. For most organizations, there's two primary choices to pick from: cash basis accounting versus accrual basis accounting. Definition of cash basis accounting, simply put, is revenues are recorded when received and deposited in the bank, and expenses are recorded when they are paid out or funds are dispersed from the bank. Consequently, your bank statement becomes your balance sheet. It mirrors your cash position. Now, what are the pros of cash basis accounting? It's simple, easy to implement, low cost, and works well for small organizations with a limited number of transactions, small staff size, or volunteer run. When is it not such a great lineup? Basically, cash basis accounting does not align with GAAP, generally accepted accounting principles, in most situations. It's open to manipulation, and it's much harder to get an audited financial statement for. An example of the manipulation is a small organization near the end of the year has a $5,000 surplus with 2 days left. They also have not paid a bill that for $8,000 for an American Express charge or whatever. If they pay the bill before the end of the year, it'll throw them into a $3,000 loss. But the bill's not due till 10 days later, which is after the year end. If they pay it then, they will keep their $5,000 bottom line. So it shows how you can control that bottom line just by the timing of paying one bill. So how did we get here? Most organizations ended up with cash basis accounting because they're a brand new organization. They start out with a limited number of transactions. They might be all volunteer run in the beginning, and they might be operating as a 990N or an organization that has receipts, gross receipts of less than $50,000. And also an organization might be there because they're temporarily on hold or have less transactions going on for a while. So we end up with some key decision points. Is cash basis the right choice for that organization? Or have there been some compliance issues? Key one there is, are we looking to maybe have new sources of funding that might not allow for cash basis accounting? And have we experienced any problems with cash basis accounting in the past where there's been some movement around to the bottom line and timing of transactions just for that purpose? My favorite area to consider is, where are we going? Where is the organization in the future? Are they experiencing a transition? Are they looking at growth? Are new programs expected to be coming in? Or we have new sources of funding where cash basis accounting might not be appropriate, like grants. Also consider, will you maybe be partnering or collaboration with other organizations on new opportunities where cash basis accounting won't align? So cash basis accounting can be appropriate for smaller organizations. However, if the picture is changing, you're expecting growth, expecting new sources of funding, you might have to consider another basis of accounting like accrual-basis accounting. That's it for now. For more information, go to SE4Nonprofits.com. See you next time.